Hello, everybody, and welcome to My Print Hash for week 29 of 2026. I'm your host, Cameron Otsuka, alongside Matt Dines. This week, Matt's going to dive into the recent CPI release and why the housing market is a key issue for the Fed moving forward out of that. And then we'll continue along the monetary path with some recent announcements from Circle. And then we'll end on kind of the relationship between China, AI models, open source, and as of last night, Trump's election tampering announcement. So before we get started, I did want to mention that Matt's been on two podcasts this week. Number one, Tommy's podcast. Number two, Tom Luongo's Gold Goats and Guns podcasts. I've reposted those on our Mindprint Hash X account, so take a look there if you're interested. Matt, I know I'm actually kind of doing this ad hoc to you, but did you have anything you want to kind of comment about kind of those podcast appearances? I know I think those are very similar to the topics that you're talking about on MyPrint Hash, but obviously slightly different bents based upon those specific audiences.
Yeah, I have a great time bouncing ideas, trying to figure the world out with Tom Luongo and Vince Lanci was on Tommy's with us. We'll be doing it again for anybody interested. If you've listened to those or you do listen to those, you find those interesting. We left a lot of rocks not flipped over that I wanted to get into. Help us all triangulate what the heck's going on. Um, I think we're scheduled to do Tommy's again on Wednesday, so watch out for that. Tommy usually releases them day of, so they hit the press pretty fast. So
Yeah,
yeah, that's coming up next week.
yeah,
All
those
right,
are gonna be great.
so let's get into June CPI. The print release this week showed the sizable drop that anyone who's been following the oil markets, WTI, et cetera, and the rolling over since basic that's been underway since May into June. Um, Basically, this should be the least surprising CPI decline I think we've seen going back to June of 2022 when we saw the oil spike, similar situation. Um, Almost like within a week, like I think it was February 22nd of 2022, within plus or minus a few days there, that the Russia and Ukraine escalation took place. Oil markets, same thing we saw with Epic Fury, shot up in response. But within 4 or 5 months, we saw that rollover effect take place. That's what we saw this month in the CPI. You can see it there, the last bar on the graph. That orange shaded section, that's your energy commodities rolling over. But then you see the other areas, food, core goods, core services. They're all tiny little slivers as well. What this is indicating is, at least for the month of June, there's a lot of slack purchasing power in the U.S. economy. We will see if this trend continues to take hold. But I the volatility or the uncertainty that I see is potentially like within the energy markets, or more specifically, what you hear us talk about with the basically the open heart surgery taking place on the global economy, right? Rewiring where all of the supply demand connections take place between different markets, nation states, et cetera. There's still a lot to go down, I think, in the near term. Obviously, we've had Venezuela in January, moved to Iran and the Persian Gulf starting in February, and kind of an open-ended piece of business. We're still waiting to resolve. This may take a longer time than many of us think, but we could easily see other fronts open up, for example, Mexico or Cuba, et cetera, in that pathway. So there is potentially still a lot of volatility involved ahead in that process. Um, but if you just look at this chart, what we're looking at here, you think about the new Warsh Fed, he's going to be leading his second meeting in a couple of weeks at the end of July. He's made it very clear. He's coming out guns blazing, essentially, like we're going after this 2% objective. We are not going to cede that ground. And if you actually look at the task in front of them right now, if oil has in fact rolled over here after that initial, call it surprise, panic, whatever you want to call it, February 27th with Epic Fury opening. Really, the next uh, key battlefront for moving inflation down towards that 2% objective, or at least printing a number that the public can believe is aligned with that 2% objective, is addressing the housing cost issue. So I've got the line items that make up the CPI index that relate to housing, kind of boxed in green. And if you go further back, you can see it's like owner's equivalent rent, rent of primary residence, lodging away from home, all the stuff involved with shelter, essentially, are core, like just persistent, stubborn, um, just sources of sticky prices, right? So addressing the housing costs issue is front and center. It's now moved to the top of the board for the Fed. You can't get like the worst Fed can't accomplish that 2% objective without doing something to address housing costs and the imbalances that exist between the younger entrants, late millennials, Gen Z, et cetera, who feel priced out of that market, and then your older end of the American population sitting in a house, their situation stable, all of that. So finding balance in the housing market, I think, is moving front and center. Like we've talked a lot about the Fannie Mae, the exiting from conservatorship, all that stuff that is a priority of this administration and has been since day one. It seems like that issue's time to come to the top of the line items or priorities. It's nigh. If it's not here right now, it's coming soon. All right. So what we're seeing in the bond markets in response to the CPI coming down, we've talked about the other central banks, so mainly the ECB, but there's a few other ones who are hiking as well. But that hiking in the money markets is creating pressure on the front end. If you take the view that basically just a very simple framework for understanding interest rates. There's a real rates component, and then there's an expected inflation component. Add those two together, and you get yield. Obviously, what we're seeing here with the CPI rolling over, with break-even interest rates, you use the TIPS market to extrapolate these numbers. But what we're seeing is declining break-even inflation expectations. Specifically on the 2 year is what I'm focused on. That coincides, if you follow these plots, this is the CPI change month over month, and I just multiply it by 12 to get a kind of a yearly baseline number. They zig and zag together. You can see the last time, basically June of 2022, when we saw the commodity markets, copper, oil, they all rolled over. That's when the CPI impulse, if you remember, like April of 2022,
Yeah.
the annualized like year over year prints were showing like a 9% roughly in the United States. Once the oil markets rolled over, then we kind of got past the big hump of that impulse, and we were on the way down. It looks to me like that same effect might be in play for at least the U.S. dollar and the U.S. Treasury yield curve. What's actually happening here is rest of the world, the other regional spheres, mainly the Eurozone and the ECB, are in response to all those like open heart surgery. We're connecting different production and consumption centers in the global trade business franchise. And Europe's response to that is to tighten money markets. That's causing upward pressure on yields everywhere as capital tries to flow towards its best return. And what that's actually doing is it's causing a rise in real rates on the front end of the yield curve. That actually has an impact on the entire yield curve. It's actually helping, suppress or put a lid on the longer term interest rates across sovereign debt yield curves. This effect like would hold, it would hold in the Eurozone. For example, we saw with the German Bund auction last week, the lack of supply, the tightening on the front end. It's drawing capital into the money markets, like the shortest risk, lowest risk, shortest duration area of your yield curve. It's building up savings and ultimately keeping a lid from the longer term end of the sovereign yield curves is everybody's in this situation where there's too much debt and not enough collateral, as Tom Luongo puts it, or real economic activity within these economies to keep a lid or to keep yields lower. So
Right.
this effect where we're letting the front end rise, the U.S. is going to, this isn't a rise in response to expected inflation expectations. It's basically the U.S. Treasury yield curve needs to rise on the front end because of what the rest of the world is doing, like other major players, mainly the ECB, Christine Lagarde. Um, and that effect is actually, if you see the green line here, um, it is keeping longer term yields flat, potentially down, right? And so then if you look at I've got the real rates then on the plus or minus the green and red line, and you can see like in 2026 and especially in the second quarter, you can see the real rates on the 2 year inching back up. So this is attracting capital into the bond markets, and it's building confidence, at least temporarily. This for as long as the tightness goes on, the tightening goes on for a major G3 central bank. And talk about the G3 currencies. The group is the U.S. dollar, the euro, and the Japanese yen. The BOJ has been tightening for 3 or 4 years now. We know that, right? Now we've got the ECB tightening as well. This is where all the talk of, oh, is the Fed going to have to hike rates this year? It makes no sense right now for the Fed to hike. There's not an inflation issue. Like we'll have to wait and see. It'll take another supply shock to energy markets on par with what we saw from Epic Fury. It will have to be another one of those if you think about it, because Epic Fury, the race for musical chairs to get a hold of a tanker after after supply couldn't find its way out into the Indian Ocean from the Persian Gulf. It'll take something along that order of magnitude to create another oil, run up and create another CPI impulse that the worst Fed would have to address. So that seems tough. Nothing's impossible, but
Right.
it's difficult to imagine something bigger than what's been sold for my entire life. The doomsday scenario allegedly in oil markets was the closure of the Strait of Hormuz. We just went through it, and it's kind of like, all right, when's the pain going to hit?
Right.
So I
Yeah.
guess we'll wait and see. Maybe it can, but it from the market signals, it doesn't look like that's the case. All right. So that's the background and interest rates. Cameron, if we can go to the next slide. That effect is actually like it's working in parallel. Like it's a tailwind to what is now the front and center issue, I think, for this administration, along with the Treasury, along with the Fed, and that is figuring out the housing market. So what we're kind of seeing in the housing market, if you're just following the news, this is CNBC, which tells you where the man on the street is in terms of his own sentiment, where public consensus is on the housing market. It's not great. We've got pending home sales for June down 5.4% from May. Home builder sentiment, I don't have this chart, I don't think, but it's been bad. Like since that June 2022 rollover in CPI, we talked about oil, copper, et cetera. The National Association of Home Builders, NAHB, does a survey, and it's a diffusion index. Above 50 is confidence, below 50 is pessimism for the business owners involved in the home builder industry. They put up a 34, which this is all a relative number, but it's just like, yeah, they're pessimistic.
Right.
And that
Yeah.
that index has been pessimistic for all but 6 months since June of 2022. And it's been on a run of they've been pessimistic for like 15 months now, something like that. So you've got a market right now. It's just like something has to change, right? And it doesn't mean 2008 is going to happen. It could just mean what it actually means is figuring out how to make the math work, get home prices right, and interest borrowing costs right to get the monthly mortgage payment to a number that your younger American home buyer can afford. right? So you need a checklist of things to go right. You need jobs, and the NFP numbers, non-farm payrolls, they've been fine. Wage growth, fine. Um, Interest rates are really the last shoe to drop in my mind. So that whole effect, everything we're seeing on the yield curve, the rising on the front end, the pressure created because the check has been passed to Christine Lagarde. She's been forced to hike rates. We'll wait and see what happens here. But if we can get the 10-year down, if we can get fixed rate mortgage costs down, you see here the article, the third bullet point there says the national average on the 30-year fixed mortgage rate is about 6.64%. It was 8%, believe it or not, 2 to 3 years ago. So there's further progress to be made, but yeah, there's like it's the next item on the docket. So this is the area to watch. Aside from, we'll talk about the midterm elections a little bit, other items on the administration's plate, but from an economic standpoint, financial system standpoint, this is the pressing issue, in my opinion.
Yep. And so then let's move from there. I think that clearly the pressure is on, I suppose, for the Fed and what they do next on the housing front. But let's move on to the monetary layer. Circle had an announcement. They announced the OCC has approved their national trust bank. So basically, last year, Circle had applied to the OCC for oversight over a Circle national trust. It took some time. This is now official. As of July 10th, the OCC has approved that. So that, I've highlighted here in red, this places the trust bank, the Circle National Trust Bank, under the direct federal oversight by the OCC. I think another key point here is that the intention from Circle's side is to custody all of their USD stablecoin reserves with this Circle National Trust Bank. But Matt, I kind of want to flip it over to you. From my outsider's perspective, or I guess side perspective, non PM perspective, when I see news like this, I think, okay, that's further integration into the U.S. monetary system, which I think is obvious. But I'm curious, from your seat, what do you see, and where does this lead in that kind of broader stablecoin digital dollar movement?
All right, so this is a big step on that pathway, long project roadmap remaining, right, as this really takes hold. We'll get into timelines in a second. But what this actually is, so before this, Circle was operating like the issuer trust for the USD stablecoin. I believe it was like an offshore domiciled entity. And that was ultimately where the issuance of USDC stablecoin came from. And then the different participants who were allowed to create or redeem with the issuer would transact and do business. And then on top of that, you had this layered patchwork of money transmission licenses state by state. It was basically, I don't know, like it's your custom order of building up this financial entity for this new framework. Well, since Genius Act passed last year, that gave the setup, the framework for these operators in the stablecoin dollar system that's emerging, proliferating, whatever, advancing, the kind of the legal clarity on and regulatory clarity on how to set this thing up. So there's different types of entities you can or operate as like to obtain your charter to be a stablecoin issuer within the Genius Act framework. Circle opted to become or operate a national trust bank, which receives its charter from the Office of the Comptroller of the Currency, I believe is the acronym, OCC. It sits it sits underneath or nested in within the U.S. Treasury, but it's its own independent organization. The Comptroller of the Currency is nominated by the president, approved by the Senate, similar to the Federal Reserve Board of Governors, right, that sit on the FOMC. We've seen this with the Lisa Cook situation. But, I dove into, chatting with the AI about this. It's like, all right, well, does the OCC president report to anybody like within the chain of command at the U.S. Treasury, like Secretary Bessent or a deputy secretary, et cetera. The answer is no. It's like it's its own independent thing from a budget standpoint, funding, all of that. It's rolled into the treasury, but it's its own independent entity. And what it's really tasked with is soundness, fairness of access, all of that stuff. But it's really tasked with maintaining kind of the integrity of the U.S. dollar. So for Circle to opt under that charter, there's signal there. It's nested within, like it's opted to make its regulator within the U.S. Treasury structure, which sits within the executive branch. Interestingly, I think the president does have the right. It's pretty clear he does have the right to fire and remove the comptroller of the currency for cause. Very similar structure legislatively, it would seem, as the Fed Board of Governors, but somehow a Board of Governors special versus the comptroller of the currency is different. I'm not sure. We'll find out, I guess, how this.
That's what these legal battles are for. Yep.
Yeah, if you're looking for consistency here, you're probably not going to find it. Or as Tom Longo calls it, coherence, right? Is what's lacking. It would seem. Maybe someone who knows this a little bit more or in depth, specifically with the OCC structure, all of that can tell me the intricate details that make this a special case. All right. So what is this? Okay. Number one, what does it allow it to do? Why would Circle? Why is this important for Circle, especially given 2-3 weeks ago, if y'all remember, the Open USD consortium, which was going to kill Circle's business model in its tracks, all of that. One of the ways you're in a bear market is when stocks or businesses, market pricing responds overly harshly to what's apparently bad news and doesn't respond to good news. And I think that was the case. You saw a sell-off in Circle on that Open USD announcement. This news that they've gained their application and approval, all of that, to operate as a national trust bank. Came through. Very muted response on the stock chart, all of that. So you can see it. It's like, all right, this is bear market dynamics here. All right. But I think in the last 2 or 3 weeks, we've seen a little bit of kind of like panache or pizzazz coming out of, or air flowing out of the balloon as far as that Open USD announcement, specifically some of the companies who were listed as among the 140 as participants came back and said, wait a minute, we didn't sign anything. We're not a part of that. We just said we'd look at it. So a little bit of air has come out of the balloon on Open USD, and Circle, apparently Open USD was going to be the Circle killer. It's kind of wait and see, not so fast. But what does this allow Circle to do, the National Trust Charter? I think that the biggest one that I see, Circle can now have direct access to payment rails and accounts on Federal Reserve payment systems, like, for example, and would no longer have to operate dependently through man-in-the-middle partners or banks, financial institutions, et cetera, other intermediaries, who could then gatekeep or just, kind of
Charge higher fees
just influence the adoption process of this stablecoin dollar. So USDC, its own stablecoin. This gives it more features. If you think about the game of Zelda we all had growing up, it's like, all right, you got your map, your all your different boxes, your tools, and everything you have access to. This gives a lot of new tools in Circle's, what do you call it, backpack, wherever Link stores all his.
I think it's a backpack or satchel or something. Yeah,
satchel.
Something like that.
Yeah. Okay. And then the other one, so the National Trust Bank allows Circle to custody client assets on balance sheet and provide fiduciary services. So now it can serve clients in a one-by-one relationship that it wouldn't have been able to under its prior setup as a pure stablecoin issuer. So it's now competing in institutional digital asset custody, corporate treasury services built around its own stablecoin dollar. It can provide white label banking and payments for, say, fintechs, other startups. It can provide wealth and fiduciary products like denominated in stablecoin dollars, which, in our framework, expect that to become more and more apparent as we get into the 24/7 real-time trading of tokenized securities, all of that, the advance. There was another test of the DTC system to go real time for tokenized securities that we didn't cover it this week, but the test went, as far as I could read, it went positively. That rollout will come down the road in the future. But it's basically building up the business model for all of these emergent things. Now, Circle is just one competitor in a much bigger, it's going to be a big market in our opinion, but it just, it's a positive sign on that stablecoin adoption process that we keep talking about. All right. So in terms of timing, right? We talk about timing matters. We talked about before the next 6 months are going to be big for housing, for interest rates, geopolitically, as well as politically with the elections in November. There's going to be a big next 6 months. A lot's going to happen. But why now for this National Trust Bank for Circle? The Genius Act required the regulators, so Federal Reserve, OCC, and then you can have state charter, like you can obtain a state charter to run a stablecoin issuer. But the rules needed to be in by July 18th, 2026, or tomorrow. We're recording this on Friday, July 17th. And then the language of the Genius Act specifies that it actually goes into effect as law on January 18th of 2027. So 18 months after its passage, signage into law, et cetera. So this is the key window. I think everybody's been looking at the Bitcoin bear market, the gold bear market, all of that, the dollar liquidity, the tight dollar,
Yep.
interest rates, the geopolitics, the whatever, everything. We've got some deadlines here approaching, as everybody, like, it's fairly obvious. We got elections the first week of November. We got January 18th, Genius Act goes live. There's a lot of stuff to get done here, and a small amount of time to fit all of that into. It's going to be a busy second half of this year. So those are the key developments. But what they really show is that window of opportunity. It's open now. A lot needs to happen.
Yep.
And expect, if you thought the first half was action packed, it's kind of like wait for the sequel is how I view it.
Great. So now we're going to go pivot over to China. And I think, this is one that I'm going to start focused on specifically the AI model space, but we want to zoom this out, and I'm going to let Matt kind of hop in towards the end here and talk about the broader picture, geopolitical picture between China and the United States. But I put up here a couple of headlines let's start on the right, actually. Lawmakers probe growing use of Chinese AI models in US companies. I think, if any of you have played with any of these AI models on your own time or locally, you'll notice a couple of things. Number one, these open source models are generally free to run on your own hardware. You might need to have the right hardware, but you can run them generally. If you use a third-party API, or you try to query against a different service provider instead of Anthropic or OpenAI, then you'll notice these are much cheaper, generally speaking, as well. So there's a little bit of this where if you're a company, you're sitting there, you're looking at your bills and you're saying, I just spent a massive amount of money on ChatGPT this month. Where can I find savings? So some of that's going on here. Lawmakers clearly getting very worried to see more and more Chinese models kind of come into the US, come into the US business use cases rather than the homegrown AI models. But also similarly to what happened with the Anthropic Mythos debacle, China is also noticing that some of their models are exhibiting, extremely powerful capabilities, and they're deciding maybe we should actually implement some type of a check before release, similar to what the United States did, right? So I think, I'm not going to get too into the politics of this or whether or not this is a good idea or not, but conceptually China and the US are both looking at these models and saying, hang on, maybe we want to be very cautious about the release of these. We want to be very cautious about who's able to actually utilize them, and so on. So the next piece here is today's news, which is, or I should say yesterday's news, which is the launch of Kimi K3. So I've got here kind of a chart. This is from Epic AI. I'm sure you can find a bunch of other ones, but this one is a country by country comparison of different AI models. This one's mostly focused on the new GPTs for the more recent dates. US is in pink, China is in blue. And the first thing I want to call out is, generally speaking, the blue line, the blue frontier is lower than the US pink frontier by date, right? So if you shift this back 3 to 6 months or so, the Chinese line, the US line, you might notice that it starts to map up pretty nicely with where China's at. And that's kind of the story we've heard for the last couple of year and a half, that China's behind. They're not far behind, but they're still behind. So that's where you're seeing a lot of this talk from Anthropic, from OpenAI, about needing to lock down who has access to certain types of queries. They want to, make sure that you can't try to distill the methods that they utilize from those models and use those to train these open source models. But Kimi K3 is very special. So I've kind of plotted up here on the right in this box. There's a little blue star. I'm sure if you can see it on your screen there, but that's about where Kimi K3 would be if you plot it based off of this kind of capabilities index. They haven't updated this quite yet. I'm sure they will, but that's a pretty big jump. This changes the trajectory, right, of the Chinese kind of frontier line compared to the US. And I think it makes it even more clear here. This is from Artificial Analysis. They have their own index of different benchmarks. I just want to call out the fact that, just a couple of weeks ago, we were talking about Mythos, which is that Claude Fable 5 on the far left there, being completely banned from use by the public because it was too powerful, right? And we now have an open source model from China, fully open. Anybody can use it as of today, as of yesterday, and effectively at the same index score as Fable 5 and GPT 5.6, which we also found out GPT 5.6 was under review by the US for about a month. So, when we talk about these things, I think there's a lot of stress and tension between the US and China in terms of how to actually control these models. The method of actually ensuring that they're released in a way that is safe, in quotes. Again, I'm not going to try to get too much in my own politics on this, but I think that there's a very big push within both governments, all governments, to try to find a way to ensure that this type of frontier level intelligence doesn't diffuse to all of your, let's say, adversaries or even others out there. So with all that said, Matt, I kind of wanted to flip this over to you next. When I first saw, I'm losing my slide here. Here we go. When I first saw this, this is Xi Jinping speaking at the World AI Conference in Shanghai. This is actually pretty like news as of today. To me, this signified, China and Xi Jinping specifically really putting his foot forward and saying, hey, this is actually a big, prioritization for us. He started his speech saying a couple of things here, but the most important one to me is the one at the very bottom here, where he says he warns against overstretching the concept of national security as applied to AI. Where we keep seeing that, it's US and Chinese language about releasing these models, who should have access to them, etc. And then the other piece is the countries that they're working to cooperate with. So ASEAN, the Southeast Asian countries, ASEAN, League of Arab States, BRICS, etc. If you think about those on the map, and then you do the inverse of those start to kind of look very similar to the Donroe Doctrine style countries, some of our other partners from Pax Silica, etc. So you're kind of seeing the world start to drift towards these two different frontier model intelligence providers. So I'll have to say, there's obviously tension going on at the high levels of politics from both of these countries, and that's where I think I want to zoom this out away from just the AI model conversation into a broader conversation about the China versus U.S. competition, because at the end of the day, the AI piece is one part of this, but there's also several other pieces I think, Matt, you're going to touch on with this Trump announcement as of yesterday.
Yeah. So before we get into that statement about overstretching the concept of national security, not overly applying it to one state versus the other, like it sounds, processing that, I still haven't thought about this a long time, but it sounds like, thinking of national security as a zero sum game. if America is asserting its sovereignty in this new transition thing we're transitioning into, um, does that imply that China can't have its own sovereignty? That Argentina can't have its own sovereignty, etc. Like, I don't think that's the case. I don't think that's
Right.
the direction we're traveling towards. So I don't find that incompatible. But I granted, I'm not in Washington D.C. One of the people in the room, which is ultimately where like those are the
Yeah.
people who matter. So it doesn't matter what I think. But no, I found this interesting. This morning's news, as well as the speech from earlier in the week, the news about the open source model development catching up reportedly to the top two frontier models from the U.S. Labs. The election. Topic that was in the election integrity topic that was the subject of President Trump's primetime speech yesterday evening. I found it interesting that the positioning as an entryway, if you think about this in terms of the how the public views this, because ultimately what that speech was meant to do is bring the public along to this developing story. It's been underway since the 2016 election, but the election integrity, this is like multiple decades in the making. The entire system, the framework, like it goes back. I mean, you could say 100, back to 1913 and the structural changes to the to American elections. But what I saw this opening up as we introduced this topic to like in a way that would be palatable to the average American voter so that they can ideally the intention is bring them along towards the sovereigntist movement, secure our elections, pass the Save Act, etc. I found it interesting that the lead into the story, which at the core is a collision both domestically between the Democrat and Republican party structures, but also like it touches the intelligence communities. He mentioned CIA was mentioned over and over during the speech, a lot of the findings, the reports, et cetera. And then also the foreign powers lining up on opposite sides of the field against each other in this transition we're talking about. I viewed so to bring China in, like if you listen to the intro of the speech, it starts with Chinese hacking, um, Chinese measures, Chinese influence, etc.
Yep.
I found that interesting, just given like the path. It's like, what are we at? What are we doing here? Is this actually a process of separating, unbundling the American economy from dependence on the offshore dollar, or I actually think maybe more likely going on is a transition between junior partner and senior partner in that prior global trade, business agreement. US is ascending to the senior partner, Europe, rest of world, they're descending back down to the junior partner, or not back down, like down to the junior partner. That's a big transition, but this is hinting there's also like a back and forth tension. It's been obvious. It's always been a thing between the U.S. and China. But the way I view this is you're trying to piece everything together, understand what's going on, get a framework, who's aligned with whom. Um, if you look at the regional spheres represented, US, Europe, China, and Russia, there's still like there's factions within each one of these entities. These things are not monoliths, as we commonly say, and the relationships still feel very fluid. Um, so there is still an element here. We're pointing like we've made accusations publicly as of last night that there was, China, or at least factions with China behind um, these occurrences, attempts to influence, and large, possibly successful attempts to influence American elections. But yeah, it just really goes to show how fluid everything is here. This seas we're navigating in this era. There is no certainty for sure as to how this plays out. Obviously, we've got alliances. Some are more clear than the other. But the U.S. China relationship it's definitely interesting. I guess we'll just say that.
Yep. Yeah, I mean, I think there's a lot to go into, especially on the AI model front. You know, that's obviously an area, the tech side, that I'm very interested in, but the broader geopolitical questions around this are going to get obviously are going to be pushed pretty heavily over the next couple of months here. So
Sure.
I think that's our episode for the week. Thank you everybody for watching. As always, follow us at MindPrintHash on X, on Substack, on YouTube. We're posting all of these there. Like I mentioned at the beginning, don't forget to check out Matt's podcast appearances on Tommy's podcast and Tom Luongo's podcast, Gold Goats and Guns. Again, those are also posted on our X account feed. And then follow Matt or myself also on X at LeveredUSDs, at Cameron Otsuka. Thank you all and see you all next week.